Hello everyone, welcome to the ichimokocharts.com daily analysis for the S&P 500 for Friday, July the 15th, 2011. Well, a continuation of the trend to the downside today. Previous day's trading we had a candle that made a lower high and a lower low, which changed the trend to the downside. Today the market has failed to take out the low, but we've also failed to take out the high. So we have an inside day in bar chart terms, and a day which doesn't change the trend, so the previous trend to the downside remains in force. This, however, is a green body candle, and a moderately large green body candle. Previous day's trading we had a red body candle, which meant the sellers made net bearish progress. Today we've had the buyers making net bullish progress. So a change of sentiment in this market. We could see previously, in the last 4 out of 5 days, that we had red body candles with only one small green body candle. So today we've seen some upside momentum from the bulls. Having said that, however, we do have very strong resistance at the cloud. We can see on the previous 4 days the cloud held as resistance for this market. You can see here where the market attempted to trade up to the cloud, where we had the twist in the cloud and the buyers lost commitment. The following day the market attempted to trade through the cloud, tested the 1332 resistance, and the buyers lost commitment. Yesterday the market traded up through the 1324 resistance, found resistance at the top of the cloud, and the buyers lost commitment. Today's trading, the market attempted to trade into the cloud, and we saw a small amount of loss of commitment, from not as large as the previous day's trading. So there's been a slight change of sentiment. However, the bottom of the cloud here has still held as resistance for this market. So even though we have the bulls attempting to take control of this market and still showing a greater amount of commitment than they did the previous day, we do have strong resistance provided by the cloud, and that is significant for this market if there is any change of trend to the upside. So this resistance at the cloud extends all the way up to 1324, and we have a previous area here of swing high and swing low, where the market found resistance just above the top of the cloud, and certainly resistance up to 1332. To the downside, if the trend does continue down, then we have potential support down at around number 1300, and that will be a very strong area if the market does test there. If we do see the market break out down below there with a bearish breakout, we could see the market trading down to 1275 by perhaps the end of the week, but we do need to watch how the market reacts to that level. The market will most likely hold up around that level if we do test there early in the week next week. Now, in Ichimoku charts terms, the market is trading just at the cloud or within the cloud, so we have a neutral market in big picture terms. The market is still bullish in the medium-term time frame because we're trading up above the Kijun-sen, but only slightly, but we are trading above there. The Kijun-sen had turned flat, and price action was attracted back towards there, and that happens quite often. It's a very strong likelihood that that will happen when the Kijun-sen is flat. The Tenkan-sen, however, here, the green line, we can see that the market is trading down below there, so the market's bearish in the fast-term time frame. So we have quite a few mixed signals with this market, neutral in the big picture terms, bullish and only just bullish in the medium-term time frame, but still bearish in the fast-term time frame. So obviously for the next day's trading, the area around the low of the current candle becomes important for a test down to around 1300. But the area above the cloud becomes very important. We also have a Harami type reversal pattern. We have the prior downtrend and a bullish small body engulfed by a bearish previous body, and that means that basically the body of the current candle is within the body of the previous candle. So we have been set up for a potential change of trend to the upside, but we do need to remember that we are limited by this overhead resistance that the market's likely to encounter.